Last week, I analyzed Nvidia's stock, and for the first time in my investment career, I was surprised to find that it may actually be fairly priced. So this week, I decided to take a look at another major semiconductor player, AMD. I want to see if it may finally be undervalued. In this video, I'll give you a quick overview of AMD's business model, go through its financials, and of course, calculate its intrinsic value to find out if it could be a potential buy. This is the fourth video in my stock analysis series, so if you're enjoying the content, consider subscribing to not miss out on future stock analysis. Now, without further ado, let's dive into the video. Founded in 1969, AMD is an American multinational semiconductor company that designs both CPUs and GPUs. On the CPU side, it competes directly with Intel, and on the GPU side with none other than NVIDIA. AMD follows a fabless model, meaning it designs its own chips but doesn't manufacture them. Instead, it outsources production to foundries like Taiwan Semiconductors. On one hand, this helps AMD stay flexible and lean without having to invest in expensive factories. However, on the other hand, they stay reliant on other companies to produce their chips. AMD is especially strong in the PC and gaming market, powering devices like PlayStation 5, Xbox Series X, and many high-performing gaming PCs. But AMD isn't just a consumer play. Its EPYC server chips have been gaining serious traction in data centers and cloud computing, which opens up a much larger and more profitable market. A big turning point for the company was Ryzen Revolution, a new line of CPUs that offered excellent performance at competitive prices, helping AMD regain market share. Now, AMD is eyeing the next big frontier, artificial intelligence. With the recent launch of MI300 chips, it's positioning itself as a real challenger to NVIDIA in the AI space. All of this has been possible thanks to the CEO Lisa Su, who is widely respected for her focused and efficient execution. Under her leadership, AMD went from near bankruptcy to becoming a serious threat to Intel. And that is part of the appeal for many investors. AMD has this underdog energy, and people love betting on comeback stories. Alright, now that we know what AMD does and how it stands out, let's dive into the financials and see how the company is actually performing. So, AMD is currently trading at almost $114, and it is down almost 12% year to date. If we would check their performance for the last year, we can clearly see that AMD has had better days, as it is down more than 40% over the last year. A lot of people might see this as a bad thing. However, I love to see companies going down, as that could mean that the market has overreacted and the stock price might actually be undervalued. Trading at around $170 billion in market cap, the company's enterprise value is less than $170 billion. What does that mean? It basically means that the company has more cash on hand than debt. It seems like a trend in these high-flying semiconductor companies, as we saw similar numbers with NVIDIA. And this is also a thing we like about the company. Looking at their PE ratio, the company is trading at an eye-watering 106 PE. Signaling overvaluation. However, next 12-month PE is under 23, which indicates a turnaround in their profitability. Looking at their return on invested capital, I'm surprised to see that their ROIC is only 3.5%. I expected at least a double-digit return on invested capital for a high-growth semiconductor company. Now let's look at their detailed financials. It seems like they have rapidly grown their revenue for the last few years, growing from $4 billion in 2016 to almost $26 billion last year. However, we see a significant slowdown in their growth over the past 2 years. It seems like AMD has good gross profit margin numbers, growing from 23% in 2016 to 53% last year, which means that we are consistently increasing the income from the revenue we're gaining. When it comes to financials, it's a really nice thing to see. Now let's look at their net income. It seems like it's all over the place and the company is struggling to get stable profitability. The only real positive I see here is that for the past few years, they maintained profitability. Now let's look at their shares outstanding to see if they are diluting their owners by issuing more shares. And when it comes to AMD, this metric is highly disappointing. In 2016, the company had 835 million shares, and currently they have 1.6 billion shares outstanding, basically doubling the amount of shares in just 8 years, and cutting their investor profits in half. And it seems like there wasn't a year where they didn't issue any shares. Truly not a thing you would want to see. Now let's look at their free cash flow to see if it shows a better picture than net income. And we can clearly see that it doesn't. It shows pretty much the same graph as net income. Again, the only positive I see here is that they have managed to sustain positive free cash flow for the last few years. Finally, let's look at the analyst estimates to see what we're predicting for AMD. When it comes to revenue, analysts are predicting AMD's revenue to more than double in the next 5 years, growing from 25 billion to around 55 billion in 2029, with an average growth rate from 9% to around 23%. For net income, the growth looks a bit better. Analysts expect AMD's net income to more than triple in the next 5 years, with an annualized growth rate of around 25 to 30%. And finally, for free cash flow, we see similar growth, growing from 2.4 billion to around 19 in 2029. So, we went through AMD's financials, and while the growth is impressive, there are some concerns. Their profitability hasn't been consistent, and the company keeps issuing shares year after year, which highly affects investor returns over time. Now, let's move on to the intrinsic value calculation to see whether the stock might be undervalued despite these issues. To calculate AMD's intrinsic value, I'll use the normalized earnings per share. Last year, they did $3.31. Let's trust the analyst and let's say the company's EPS grows around 25% for the next 5 years. And I would assume that their growth slows down after that. So let's assume that they will start growing at 15% after 5 years. If we expect them to trade at a 15 terminal multiple, and all of these assumptions come true, it seems like AMD could be undervalued. However, in my opinion, these growth rates are really optimistic, and they assume that nothing bad happens to AMD in the near future. Also, you have to keep in mind that this doesn't account for their share dilution, which they have been doing aggressively. So, after reviewing AMD's financials and calculating its intrinsic value, at first glance the stock might appear fairly priced. However, their ongoing struggles with sustainably growing profitability makes me skeptical. Before considering any type of investment, I want to see stronger and more consistent earnings performance. On top of all of that, their consistent share dilution is a major red flag. It's hard to get excited about a company when your ownership is slowly being watered down. If you haven't seen my recent video on Nvidia, you can find the link in the description. And honestly, at current prices, I consider Nvidia to be the stronger pick. So overall, AMD doesn't quite pass the test for me right now. But what do you think? Maybe I missed something. Do you have any other companies you'd like me to analyze? Leave your comments down below. If you enjoyed the video, consider subscribing and clicking the like button, as it does help to grow my channel. And as always, guys, thank you for watching, and I hope to see you in the next one. Bye.